Good morning, everyone. As the sun rises over the world's financial capitals, a new week begins, one that could set the tone for markets in the months ahead. This week is shaping up to be pivotal for global markets, with investors closely monitoring everything from U.S. corporate earnings to major political developments in Japan and beyond. These events don't just impact Wall Street or Tokyo. They influence your investments, your retirement savings, and even the prices you pay for everyday goods and services. The landscape is complex, with a web of factors at play, but understanding the key drivers is essential for anyone looking to navigate these turbulent times. We're seeing a mix of optimism and caution. Some markets are rebounding after recent setbacks, while new questions and uncertainties keep investors alert and sometimes on edge. Artificial intelligence continues to be both exciting and worrisome, as its rapid growth and rising costs spark debate among business leaders and policymakers. Major tech companies are reporting earnings this week, offering a crucial health check not just on the sector, but on the broader economy and its future direction. Commodities like oil and gold are also in sharp focus, reflecting shifts in global demand, supply chain disruptions, and ongoing geopolitical tensions that can move prices overnight. With crucial U.S. jobs and inflation data ahead, plus new economic signals emerging from China, we're here to help you make sense of it all, so you can stay informed and prepared for whatever comes next. As the trading week begins, cautious optimism is in the air for U.S. markets. Stock futures are pointing higher, building on last Friday's historic rally that saw the Dow close above 50,000 for the first time. The S&P 500 and Nasdaq also surged, offsetting earlier losses and signaling resilience. This positive momentum follows a period of volatility, especially in the tech sector, where concerns about future innovation costs have dominated. Investors are recalibrating expectations as new data and earnings roll in. The big question: can this upward trend last? Early gains are promising, but the week is packed with potential hurdles. Investors want concrete evidence from earnings and economic data to justify the optimism. The market's next move hinges on what we learn in the coming days. Artificial intelligence is shaking up the tech world, but not always in a good way. Amazon's shares dropped over 5% last Friday, despite a market rally, as investors balked at the company's heavy AI spending. This isn't just Amazon. Alphabet and other tech giants are pouring billions into AI, raising questions about when these investments will pay off. The uncertainty around returns is making investors nervous, especially those focused on short-term results. Building AI infrastructure is expensive, and the payoff could be years away. This tension between long-term vision and short-term performance is putting pressure on tech stocks. Even as the Nasdaq rallies, concerns about AI costs linger. As more tech companies report earnings, their AI spending plans will be under the microscope. Corporate earnings season is in full swing, and tech is in the spotlight. Chipmaker Onsemi reports today, with analysts watching closely for signs of strength in AI-related demand versus weakness in electric vehicles. This report could set the tone for the entire semiconductor industry. Other major tech names, Datadog, Spotify, Cisco, and Applied Materials, are also reporting this week. Their results will offer a comprehensive view of the tech sector's health, from cloud computing to digital entertainment. Investors are especially interested in forward guidance, supply chains, consumer demand, and AI spending. These outlooks often move markets more than the numbers themselves. The week's earnings will shape sentiment for tech and beyond. Watch for any surprises. They could ripple across the market. Turning to Japan, a major political shift is underway. Prime Minister Takaichi and her Liberal Democratic Party have won a historic supermajority, just 110 days after she became Japan's first female prime minister. This landslide victory gives her a powerful mandate to push forward with her economic agenda. Takaichi's platform combines increased government spending with targeted tax cuts to jumpstart Japan's sluggish economy. With a supermajority, her ambitious reforms now face fewer obstacles, political uncertainty has lifted, and markets are responding positively. For Japan, this stability is a welcome change after years of leadership turnover. Now, attention turns to how quickly her government can deliver on its promises. Prime Minister Takaichi's victory sent Asian markets higher, with investors welcoming the return of political stability. The sense of certainty brought by her leadership has been a relief for traders who have been wary of recent political turbulence. As a result, market sentiment has improved, and optimism is spreading across the region. Japanese government bonds, recently under pressure, may now stabilize or even recover. Investors are hopeful that the government's renewed mandate will support fiscal discipline and encourage long-term investment in Japanese assets. The yen could strengthen, affecting exports and consumer purchasing power. A stronger currency may make Japanese goods more expensive abroad, but it also boosts the buying power of households and businesses at home. Currency markets are watching closely as a barometer of confidence in Takaichi's leadership. Any sign of policy missteps or uncertainty could quickly be reflected in the yen's value, making this a key area for global investors to monitor. Her supermajority paves the way for fiscal stimulus, more government spending and tax cuts. This gives her administration the flexibility to respond to economic challenges and support growth initiatives without facing significant opposition. This pro-growth policy is good news for stocks and could attract more investment into Japan. Investors are already positioning themselves to benefit from potential gains in sectors like technology, manufacturing, and finance. A stable, resurgent Japan benefits the global economy as well. International partners and trading allies are watching closely, hoping for increased cooperation and stronger economic ties. As the world's third-largest economy, Japan's direction matters for international trade and finance. Its policies can influence global supply chains, investment flows, and even the strategies of multinational corporations. The election removes a major uncertainty, letting investors focus on economic fundamentals. With political risk reduced, attention now shifts to growth prospects, inflation, and corporate earnings. The initial reaction is positive. Could this be the start of a new era for Japan? Only time will tell, but for now, the outlook is brighter, and confidence is returning to the markets. Let's check in on commodities. Oil, gold, and silver are all making moves in the markets this week, each responding to a unique set of global factors and investor sentiment. Oil prices fell this morning, with Brent crude down about 1% to $67 a barrel. This drop comes as tensions in the Middle East have eased somewhat, and diplomatic talks between the US and Iran continue to progress, reducing fears of supply disruptions. At the same time, a stronger US dollar is putting additional pressure on oil prices, making crude more expensive for buyers using other currencies. This currency effect often leads to lower demand from international markets. Meanwhile, gold and silver are on the rise after a volatile week. Investors are turning to these precious metals as safe havens, especially as uncertainty lingers in the broader financial markets. These metals have a long-standing reputation as classic safe havens, offering protection when inflation is high or when economic uncertainty looms large. Many investors see them as a hedge against both market volatility and rising prices. The focus now shifts to upcoming US jobs and inflation data, which could set the direction for precious metals in the near term. Strong economic numbers might dampen gold's rally, while weak data could send prices higher. Higher interest rates can hurt gold, since it doesn't pay interest, but persistent inflation fears tend to boost its appeal as a store of value. Investors are watching central bank moves closely. This week's economic reports will be critical for commodities, as traders look for clues about the future path of inflation, interest rates, and global demand. Investors are hedging their bets ahead of the data, adjusting their portfolios to manage risk and take advantage of potential price swings in oil, gold, and silver. As the numbers come in, watch for sharp moves and increased volatility across the commodities markets, as traders react in real time to the latest economic signals. The main event for investors this week is U.S. economic data, especially jobs and inflation. The non-farm payrolls report will reveal how many jobs were created or lost, and the unemployment rate. A strong report signals growth, but too strong could mean inflation risks. A weak report raises recession fears. The Federal Reserve is looking for a Goldilocks number, not too hot, not too cold. The CPI report, our key inflation gauge, will show if price pressures are easing. If inflation is high, the Fed may keep rates elevated. If it cools, rate cuts could be on the table. These reports are crucial for Fed policy and market direction. The data will set the tone for weeks to come. As we wrap up, it's clear the global economic outlook hinges on the US and China. This week's US jobs and inflation data will guide the Federal Reserve's next move, impacting stocks, bonds, and currencies. Investors are watching closely. These numbers could fuel a rally or halt it. Meanwhile, China will release key data on industrial production, retail sales, and trade. As the world's second-largest economy, China's health affects global demand for everything from oil to consumer goods. Weakness in China could weigh on global growth. Strength would be a welcome boost. Investors face a complex mix of optimism, caution, and uncertainty. By tracking earnings, politics, and economic data, we'll get a clearer sense of the path ahead. It promises to be an informative and potentially market-moving week.